Britain is facing a crisis of confidence from the financial markets, which actually has been years in the making. Today's Big Take looks at the sudden desertion of trust from financial markets after the Truss government revealed its economic plans and the history behind that. Bloomberg's Philip Aldrick joins us now with more. And Philip, we've heard the Prime Minister doubling down on her commitment to the policies that were announced last week. So for anyone who was expecting some sort of U-turn, that's not been the direction of travel so far from the British government. But as I said there in the introduction, these concerns about the UK, long in the making. What's the backstory behind those?
Yeah, so it's all a question of fiscal credibility since the mini-budget on Friday. And that's what spooked markets. They just don't believe the government's word, the Tory party's word any longer. That's the party of sound money, is traditional fiscal credibility compared with the Labour Party. That's been the sort of framework of people's and markets thinking. Of course, is what has happened since, effectively, you can look just before the Brexit referendum in 2016, there's been this kind of lackadaisical attitude towards that referendum in Scotland, which was an existential threat to the UK. Then you had sort of a loose connection with the truth in some of the campaign statements during the Brexit referendum, and all of this is starting to erode confidence in the structures of government. And obviously, and Boris Johnson, and then went a little further. There was the tax on the judiciary, and we've had questions about experts for quite a while now. And then, of course, Liz Truss in the campaign trail just went, all guns blazing against the experts, talking about the Treasury blob, the institutions of the Bank of England, and the fiscal watchdog in the UK. All of these were kind of just put under question by the government, and that combined with the sort of fiscal indiscipline in terms of just laying out the tax cut side and not actually saying how we're going to get the money back. So huge amount of borrowing. Yeah. Trust us, guys. We're going to bring the public finances under control. By the time after that sort of 6 years of erosion of confidence, nobody trusted them at the end of it.
Okay, so the trust was not there. Matt, jump in.
Well, I heard Valerie Tytel earlier this morning kind of comparing the Truss economic plan to Reaganomics, and I'm sure that she would be flattered. I'm sure that's what they're aiming for, basically. But the British government, especially post-Brexit, in the midst of this incredible inflation, is in a very different position than the U.S. government was after Volcker had already stopped inflation, when everybody wanted to buy treasuries and our currency was strong. We had a current account. We had extra money in the current account. So why are they doing this now? It seems like the worst time to make this kind of economic decision.
Right, so the government believes that actually compared with the G7, we're in a relatively strong position because our debt to GDP ratio is below all other G7 members except for Germany. So you start from that relative strength, and as this, as sort of international economics ends up becoming a bit of a sort of competitive game, that's the bedrock of why they think they can push ahead with this kind of, these spending cuts combined with the other big part of the reforms are supply side changes. So they're deregulating the city. They're going to deregulate all sorts of things from childcare to agriculture. These details were not in the Friday statement, but they are going to be coming out in the next few days. And you combine that with what they're going to where they are going to backtrack a bit is they say that it isn't backtracking, but they are finally going to make some statements on what they're going to do on how to find savings to make the budget balance or just come into balance a little bit more. So the combination of evidence of growth reforms, the sort of strength of the debt to GDP ratio, relative strength of debt to GDP ratio, and some of the fiscal, some of the savings that they'll find, that's how they are going to explain, and they hope what they're doing, and they hope that markets are going to start to buy it. That's the aspiration, that kind of confidence will be restored because people will begin to understand the strategy. As you say, Reaganomics starts from a much stronger position, so that's the big question. I mean, are people going to buy it?